The share purchase agreement can be anywhere between 5 pages up to 200 pages long. But what goes into this document and how do you know what you're signing? I'm Malcolm Zoppi, an English qualified solicitor, and in this video we will discuss the share purchase agreement. First, we will learn about the key provisions of the SPA. Second, we will discuss the 3 main ways to structure an SPA. And lastly, I will provide one practical tip to the buyer and one to the seller. But first, what is the purpose of the share purchase agreement and what is the difference between the SPA and the asset purchase agreement, the APA? In short, the purpose of the SPA is to detail the agreement between the buyer and the seller of a UK limited company. The difference between the SPA and the APA is that with the SPA, the share purchase agreement, you're buying an entire limited company via the purchase of the shares of the ownership of that limited company. Instead, when it comes to the APA, the asset purchase agreement, you're buying specific assets from a trading company. If you want to learn more about the difference between these two documents, watch this video right here. Fantastic, let's get started. So with chapter 1, we'll discuss the key provisions of the share purchase agreement. In my opinion, there are 3 main parts to an SPA, or 3 most important parts of an SPA. The first deals with the purchase price. So the purchase price is rarely completely fixed when it comes to the acquisition of a company. Instead, the purchase price is typically adjusted in 3 main ways, which we will discuss in chapter 2 of this video. Typically, the SPA would have a clause in the main body of the contract that specifies what the purchase price is and how that purchase price is adjusted, increased or decreased. And then there would be a schedule, an extension of the SPA that goes more in depth about how to calculate the adjustments to the purchase price. How do we come up with how much to increase or decrease the purchase price? The second main provisions are the restrictive covenants. So this is what the sellers can and cannot do after they've sold the business to the buyer. Typically, these sellers are restricted from doing the following 3 main things. Number 1, competing with the business they've just sold. Second, poaching clients. And third, poaching suppliers. The third main part of the SPA will be the warranties and the tax covenant that the sellers give to the buyer. So the warranties and the tax covenant typically are 2 separate schedules, extensions to the SPA. And when it comes to the warranties, these are the promises that the sellers are making to the buyer as to the state of the business. A very simple example of a warranty is the company doesn't owe any money to HMRC. When it comes to the tax covenant, effectively, again, is the sellers agreeing to indemnify the buyer and the company of any tax liabilities that were, for example, unknown. Fantastic. Moving on to chapter 2, the main ways to structure a share purchase agreement. Usually, only a percentage of the purchase price is actually paid on completion. The rest is usually deferred over a period of time, let's say 2 to 3 years. Now, purchase price adjustments are usually made by either increasing or decreasing the deferred payments, the money that the buyer owes to the seller. Important to keep in mind is that the purchase price adjustments are usually calculated after completion has already occurred. So after completion, the accountants of both the buyer and the seller typically get together and discuss how the purchase price should be adjusted. Okay, so what are the 3 main ways to adjust the purchase price? Option number 1 is referred to as the locked box mechanism. In short, the purchase price is locked as of the locked box date. So that's when the parties agree, okay, this is the purchase price. And until completion, the parties agree what can and cannot come out of the business. The value that comes out of the business is typically referred to as leakage. And then we have permitted leakage, so things that the parties agree can leave the business. For example, money to buy stock so that the company can continue trading. And then there is unauthorized leakage. So for example, typically the seller would not be allowed to declare dividends and extract profits. If any unauthorized leakage occurs, let's say the seller does declare dividends and therefore distributes profits, then that unauthorized leakage decreases the purchase price by decreasing the deferred payments, aka how much the buyer owes to the seller. The second main way to structure an SPA is on the cash-free, debt-free basis. In short, the seller is supposed to hand to the buyer the business without any liabilities and free of any excess cash. If there are liabilities left in the business as of completion, then typically these reduce the purchase price pound per pound. The opposite is true when it comes to excess cash. So if there is more cash in the company's bank account than expected, then that typically increases the purchase price pound per pound. And the third main way to structure an SPA is on the net asset value basis. So first, what is a net asset value? It's a way to value a business to determine how much a business is worth. It's calculated by taking all assets less all liabilities. Now, the net asset value of a company fluctuates because, for example, the amount of cash the company has or the stock that the company has goes up and down as the company trades, as the company buys and sells products. And that is why typically the parties would agree on a target net asset value, so how much the company should be worth as of completion. Let's assume that that figure was £1 million and that the parties proceeded to completion and the buyer has bought the business. Then the completion accounts are produced, so the financial accounts that record how much the company was worth as of completion, and it turns out that the actual net asset value of the company was £1.2 million, so £200,000 more than the target net asset value. In that case, £200,000 are added to the purchase price, and therefore the buyer owes an additional £200,000 to the seller when it comes to the deferred payments. If the opposite was true, if the actual net asset value of the business was £800,000 instead of £1 million, and therefore there is a £200,000 shortfall, then the purchase price is reduced by £200,000 and the buyer owes £200,000 less to the seller. If you want to learn more about purchase price adjustments, feel free to watch this video right here. Now, before we discuss my top 2 practical tips for the buyer and for the seller, feel free to send me an email if looking for professional legal advice. With our legal advice calls, there are no charges, no obligations, and no nonsense. Contact me now at info@zoppi.co.uk. As promised, chapter 3 of this video are my practical tips. Now, typically, buying or selling a business takes at least 3 months, a lot of time, and a lot of energy. With this in mind, my tip to the buyer is to regularly meet with the seller, ideally on a weekly basis, even just via video conference, to continue to build rapport and trust. It's very likely that at some point, the solicitors in the deal won't be able to agree on certain provisions or wording of the SPA. That's when the buyer and the trust that the buyer has built with the seller will come in handy, and that's when the parties should meet to discuss and iron out these details. Instead, when it comes to the seller, my practical tip is to get support from someone. As a seller, you might be running your business alongside trying to get the deal across the line, and that is going to take a lot of energy and bring a lot of stress to you. Try to bring someone in to help you, whether that is someone internally in the company to take on some of your day-to-day duties, or someone like a spouse to help you with fulfilling the due diligence requests that the buyer will have during the acquisition process. As always, if you have any questions, feel free to put them in the comments below. I promise I will answer any questions that you may have. If you are the buyer of a business, make sure to watch this video right here to learn about how I will structure a business purchase agreement. Instead, if you're the seller, watch this video right here to learn how you don't want the buyer to structure the business purchase agreement. Thank you for watching.